The ADX, short for Average Directional Index, is designed to identify the development of directional markets. It simply answers the question of if the market is directional or not. In other words, whether the chart is showing a trend or not. This lesson will examine real chart examples to see various uses of the Average Directional Index, along with preferred conditions for its application and cases where it fails and/or has limitations. A wide range of real chart examples will be covered from various time ranges. No matter when you watch this or which particular charts you choose to apply the ADX indicator on information presented can be of use to you. ADX presents values from 0 to 100. Values from the 20 to 25 range are often considered low. With ADX at or below these values, the market is often non-directional, and usually more directional movement can be seen once values reach the mid to upper 20s. The indicator just focuses on the strength of directional movement, not whether it's bearish or bullish. In this case, it's a strong downtrend, and the strongest directional movement is around late July when ADX values reach the mid to upper 20s and beyond. Then once it goes flat and begins to drop back towards the mid to lower 20s, there is more range-bound movement. Nearing the mid-20s is often a period of transition. In this case, it's bearish to neutral prior to the next phase of more directional movement, which in this case is a bearish continuation. That period of deliberation in the middle is unsurprisingly when values were in the mid to low 20s, but sometimes getting attached to certain values can be too restrictive. A sudden steep increase in ADX at any range of values usually indicates a rapid phase of trend development. And sometimes flat movement of the ADX at any value can indicate more horizontal movement in price, as opposed to strong directional movement, either up or down. It just so happens more neutral movement usually happens when these values are flattening down through and towards the mid to low 20s. Though in some cases, when ADX remains flat for an extended time at values such as above 25 or even 30, there can still be a period of relatively neutral price movement. Certainly do pay attention to the values of the ADX, but also consider how flat or steep it has been moving, no matter what range of values it's at. Like other indicators that are based on a certain time range, ADX is often left with default values at 14 to have a good balance between short and long-term context. Again, values of the ADX are a good benchmark such as 20 or 25, but also pay attention to how steep or flat it has been developing. Right here, values are quite low, well under 20. However, a gradually steepening incline has been developing. It's been especially noticeable with the ADX starting about mid-May, and that's also about the time when price began a more noticeable and stable uptrend out of the horizontal range of the past few weeks. Thus, the ADX has done its job and given us an indication of directional movement, in this case for a moderate uptrend, where the strongest part of the incline actually wasn't at 20, it was just below it. And even though values were above 20 for some time, that's also when the trend began to move towards more bullish to neutral to bearish. Unsurprisingly, when ADX values began to sharply decline, there was a shift towards a well-defined non-directional range, which is actually quite wide given the increased volatility with price. Now there's another sharp increase in ADX, and that's also when there's more directional movement. In this case, it's towards a downtrend. It's certainly well developed once values reach over 20, but ADX was also quite steep well before reaching 20, and that's also when there was a sharp directional movement in price when the downtrend initially began to accelerate. It's a good demonstration of why observing those thresholds around 20 to 25 can be important, but also pay attention to how steep the ADX has been declining or inclining and flattening. See, even before ADX returned back under 20, it was quite flat and had no significant sharp angles for any extended time, which summarized the transition towards more range-bound, non-directional movement that was in line with how price began to stay more horizontal during the shift towards more neutral to bearish movement, which is quite the opposite. Of course, there's a steep directional movement in price, in this case downwards. The ADX gives an indication of the transition towards more directional movement once it begins to rise sharply. In particular, once it begins to surge well above the threshold in the mid to low 20 range. Though near the beginning of the downtrend acceleration, there was also a noticeable steep incline with the ADX just before it began to reach over 20. The ADX can be considered a lagging indicator. This shows more in some contexts than others, such as when price is in a relatively horizontal range, but has sharp swing points resulting in minor to even moderate changes in price. Sudden major moves, especially gaps, can also throw off the ADX indicator with lagging results. Often after the sudden directional movement of a gap, there will be a flatter phase, which the ADX will be slower to reflect since it is still on an incline after the initial gap. But it can eventually catch up, especially if there is a defined continuation, such as with this downtrend. Strong directional movement in this case towards a downward direction is indicated by the ADX to be quite strong since it is nearing values of 50. When there's a relatively quick major reversal, such as this bullish reversal, there can still be a brief period of less directional movement during the change in trend that will continue to be reflected for a short time longer, even though price has begun to sharply reverse. This lagging discrepancy of flat to falling ADX values can be especially apparent to when there's a sharper breakout from a relatively small horizontal range. During cases such as near the end of this uptrend, lag will be less apparent when there is a smoother and gradual transition to more non-directional movement. Since ADX is only an indicator of directional strength and not the exact direction either bullish or bearish, a more rounded reversal area such as this peak before the gap down can result in the ADX appearing to have risen for a prolonged period. Because it continues to display directional strength from both the upswing before the gap down and the continuation after the gap down. Since that downward reversal point just before the gap down isn't overly sharp, nor is it overly flat. In this way, ADX values start to rise when the upswing begins and continue to rise when the downswing begins with no noticeable reversal or plateau of the ADX line due to the chart remaining very directional, first bullish, then bearish, with no major delay in between, with overly flat or sharp movement around that bearish reversal point. That's in contrast to the halt of this strong downtrend, where ADX noticeably flattens and begins to decline once this defined neutral to potentially bullish range begins to form to begin a new phase of overall less directional movement. For the purposes of things such as non-directional options strategies, ADX can be a useful tool in identifying well-defined horizontal ranges that last for a longer period, such as in this case where values remain well below 20. In addition, price and ADX values don't have drastic and sustained fluctuations. Then when the chart decisively breaks out of the prolonged horizontal range, we see those familiar characteristics. The main one being a sharp increase in ADX that eventually crosses well above 20. That coincides with the strongest directional portion of this trend. In this case, when the uptrend began to break higher and surpass the upper boundary of the well-defined range. After the uptrend stalled, there was the appropriate plateau and the decline of the ADX, which naturally begins to rise as there is an acceleration in directional movement. In this case, towards a downtrend. Though ADX doesn't rise for long due to a relatively rapid transition towards more range-bound movement that sees frequent yet smaller fluctuations in price in relatively defined ranges, while ADX generally decreases or remains flat at around values of 20 or lower. Then, with a transition to a well-defined uptrend, ADX rises on a moderate to steep slope. As usual, bullish development becomes even more well-defined after ADX goes over 20. It's a good demonstration again of why the default setting is left at 14 most often, because stronger directional movement usually takes place in the medium to short term, while the development towards that strong portion of a trend usually takes a longer time to develop, and the stronger directional movement usually also has an impact on the longer-term context of the chart well into the future. When the ADX Average Directional Index Indicator is combined with the Bollinger Band's Width Indicator, the resulting combination helps identify areas of low activity. Usually when ADX initially drops below 20 and Bollinger Band's width goes under 30, then it's preferable these two indicators have the same approximate movement with a slight decline or a plateau similar to what happened at these areas. This is contrasted with more directional movement. In this case, the more significant portion of the downtrend continuation gets underway when Bollinger Band's width goes back over the lower threshold of 30, and ADX goes back over its common lower threshold of about 20. Then usually when Bollinger Band width is over 50, and ADX crosses over 30. Such values representing high volatility and directional movement can normally only be maintained for a short time and tends to mark the beginning of a new phase on the chart. In this case, it's quite a significant shift. The relatively high indicator values coincide with the beginning of a major halt to the long-term downtrend and a move towards relatively range-bound trading. Now Bollinger Band's width goes back under 30, we narrow down our time range of interest to when ADX crosses under 20 to highlight what is actually relatively insignificant movement in the broader context. It may appear quite eventful in the short term, especially when there's a slight incline with the indicators toward November, when these relatively sharp drops increased volatility that was still relatively insignificant in the grand scheme of things, especially with the Bollinger Band width indicator remaining under 30, along with ADX remaining firmly under 20 in the following weeks. Then more recently, there's been highly directional movement and greater volatility in a bullish context this time. Both these indicators go back over 30, which means they're at moderately high values, so it's no surprise they can't be maintained for a long time. The resulting decrease in volatility and directional movement indicates a major delay to an initially strong uptrend. Now, something interesting and not that common happens here. Bollinger Band's width briefly peaks over 70 before steadily declining, which is quite natural. However, ADX continues to go up and in fact goes well over 50. This divergence indicates volatility is declining, but directional movement, in this case upward movement, continues. The result is the familiar slowdown of the trend, but with a neutral to a bullish posture instead of the more normal neutral to bearish posture. This becomes much more noticeable when both indicators are on a decline back to their lower thresholds. For more on indicators as well as Fibonacci methods, follow Ascencore. Thanks for watching and have a nice day.